I would like to say, if you have not downloaded the Adda 247 application, so download and subscribe the Officers Adda 247 YouTube channel so that you can get notifications of the live session, notifications of the important news that is related to your examination. Okay, so subscribe the Officers Adda 247 YouTube channel for getting regular updates. Okay, and download the Adda 247 application so that you can get everything at a one place. Okay, so download and subscribe. Okay, so now let's start the session of today. So today's topic, that is introduction of the bond and term associated with the bond. And this topic is very important in terms of the examination. Like, you will definitely going to get the question related to bond. Okay, so before to understand, before to before to solving the questions, you need to understand what is bond, what are the different types of the bond, and what are the different terms that associated with the bond. Okay, so in this session we are going to understand everything related to the bond. So before to proceed, like the motivational quote, if I say, if you change your mindset, you have the ability to change the world. And that is really true, I think, because if you change your mindset, like if you are just going to change your mindset about the JIIB examination, like you have to, anyhow you have to make it. Okay, then from today the things going to change for you. Like, you are just going to put more and more effort for your preparation. All right, so just change your mindset towards the examination, right? Okay, before to proceed, I would also like to say our target batch is started, and in this target batch you are going to understand everything from the basic to advanced level. Like, you just do not need to worry what to read, what to, from where to start your preparation, and what things are important, what things are not important for the exam point of view. There are nothing to worry about that. We are all here for you. Like, we know what the previous year based questions we discussed in our session, and based on that we are going to prepare you for the examination. Okay, basically we are focusing not for the 50 marks, like you guys just getting the 50 marks. We are not targeting that. We are targeting for the 65 plus 70 plus, like. So I think the same target you should you should also have. Like, you have to think like you have to or say you have to obtain a very good marks in the JAIIB examination. And this is also a very convenient price. Like, you only have to use a code, that is Y422, and with this code you are going to get a big discount on this. Okay, so at the last I would also I would also explain you how you can enroll in our target batch. So AB class, that is scheduled from the 4th of April, while a PPB and LRB classes is started. So this is a very right time when you should just enroll in our batches, so that you just do not need to worry about how to start your preparation and how you can just achieve a very good marks in the examination. Okay, so let's start today's session with the topic, that is bond. Okay, okay, so what is bond and why, what we understand by the bond? In the definition term, if I say, a bond is a fixed income instrument that represents a loan made by an investor to a borrower. So the question is, why bond is known as the fixed income instrument? Who is the investor? Who is the borrower in case of the bond? Okay, so bond basically issued by the government. Bonds are mainly issued by the government and corporations. Okay, that is the bond. So that is issued by the government or corporations. For what? For what government and corporations issued the bonds? For raising the money. And that bonds actually, that bonds actually just brought into the market for the general public. For the general public. So that are the general public, and that bond actually purchased by that general public. Okay, so that bond actually purchased by that general public. Okay, so that's why bond is issued. Now if the general public is just if the general public buying the bond, that means now the money will go to the government or corporations, right? If the general public is buying the bond which is issued by the government and corporations, so that means the money is going from the general public to the government and corporations, and in respect of that, a government and corporations make promise to the general public through the bond, like the government and corporations will provide interest as well as principal on the maturity time, while interest is paying on the regular interval, while principal is paid at the maturity time. Okay, so we have to understand, suppose that any bond that is issued by the government and corporations, or government or corporations, okay, mainly issued by the government or corporations. So suppose that government just issuing the bond that is of the 1,000 rupees, all right, which is purchased by the general public. If I say which is purchased by the general public, right, so that is the government. So that government is actually issued the bond which is purchased by the general public. In respect of that, suppose that maturity period is 3 years for that bond, okay, while rate of interest that is 10% is for that interest is payable at the regular interval. Okay, so that means for the first year, the holder, that is known as a bond holder. Okay, so who purchased the bond, that is known as the bondholder, and who issued the bond, that is known as the issuer of the bond. Okay, or say bond issuer, that is known as a bond issuer, or that bond that is purchased by the general public, so that is known as the bond holder. Okay, right. So in the first year, that general public, or say that person is going, suppose that we are talking about any person, that name is A. Okay, so that person A is just going to get interest for the first year, that is 100 rupees. Again for the second year, that is 100 rupees. Again for the third year, that is 100 rupees. Okay, and at the time of the maturity, that is 3 years, that means on the 3 year at the maturity time, the bondholder will get interest as well as the principal, which is 1,000 rupees. So that is the case of your bond. Okay, now I hope you are going to understand why it is known as the fixed income instrument. All right. Okay, so this is just an example that you have to understand, like what is bond, what is the mechanism of the bond. All right. Okay, so bond, now the question that who is known as the investor and who is known as the borrower in the case of the bond. All right, so who is just going to take the money, that means that known as the borrower, right? So that is a very important question can frame in the examination. In the bond, who is known as the borrower and who is known as the investor? That public is known as the investor who is going to purchase the bond. Okay, so that is known that known as the investor. Okay, so why we are talking about like purchasing the bond, we also can say that that public, or if I say like if we just name like A, B, C, that actually investing in the bond for getting the fixed income instrument. Okay, so that is the mechanism of the bond, and I hope it is now very understandable for everyone, right? And it is a type of the IOU. This is also very important. It is a type of the IOU. That is, IOU actually is a document. IOU, that means IOU, right? IOU. That is a document that acknowledge the existence of the debt. Okay, so that acknowledge the existence of the debt. So that is the mechanism of the bond. Okay, so that acknowledge the existence of the debt between the lender and borrower. That includes the details of the loans and its payment. Okay, so that IOU document actually includes the detail of the loan and the payment. So bond, what we understand by the bond, that bond actually issued by the companies, government, state government, corporations, for what? For raising the money. for raising the money. And why the government and corporation just need to raise the money? If I'm talking about the government, so why government just need for raising the money? If I'm talking about for the government and government issued the bond, so why government need for issuing the bond? Because that may happen, like government need to fund road infrastructure, government need to fund school infrastructure, dams, and etc., or say and etc. Okay, so that's why government just issued the bond. Okay, and why corporations just issued the bond? Why corporations issued the bond? Because like corporations just we can say like just corporation just want to grow their business, to buy property, to buy equipment. So that's why corporations also issued the bond for raising the money. Okay, so I hope this is now very pretty much understandable for everyone. All right, now the next thing that is most important, because from that you are going to understand how to solve the questions related to the bonds. Okay, so for that you have to understand the different term that associated with the bonds. All right, so what we understand by the face value. So whenever we are talking about the face value, that is also known as the par value. That is also known as the par value. Okay, so that actually represents the amount that borrowed by the firm, that borrowed by the government, that borrowed by the corporation, which it promises to repay after a specified period. Like we mentioned in the previous example, कि suppose that any government or corporations issued the bond, like the face value of the 1,000 rupees. All right, so that means that represents the amount that borrowed by the government, corporations, companies, firm. All right, like which it promises to repay after a specified period. Suppose that a specified period is a 3 years or say 5 years. Suppose that is 5 years. Okay, so that means after 5 years, that government, corporations, or companies that repay after the 5 years this 1,000 rupees. So that is known as the face value. You can also say that it is the amount the bond will be worth at the maturity. Okay, so what we understand by the face value, that is the bond amount, that is the value, that is the amount the bond will be worth at the maturity. Okay, so that is known as the face value. Now, what we understand by the coupon rate, and that is the most important thing that you have to understand. Okay, so whenever you see like a coupon rate in the examination, like the any question you are going to get the face value and the coupon rate is given. All right, and YTM is also given, and YTM we are going to understand in the next session. Okay, so YTM like YTM given, coupon rate is given, face value is given. Okay, so you always have to understand, whenever you find a coupon rate and the face value of any bond, that means you have to multiply that, and from that you are going to evaluate, you are going to determine the annual interest earned by the investor. All right, so from that also one question that that ask like what the annual interest earned by the investor, and the face value will be given, coupon rate will be given, and the YTM is also given. All right, so you just do not need to confuse between the different percentages. You always have to understand, whenever the face value is given and the coupon rate is given, you have to understand, you just multiply with the coupon rate to the face value, and from that you can just obtain the annual interest earned by the investor. Okay, so that is the very important thing to understand. All right, so basically a coupon rate, it is a rate of interest the bond either or say the bond issuer will pay on the face value of the bond. The bond issuer will pay on the face value of the bond. So that is the coupon rate. Okay, so suppose that this is a bond, and whenever we are talking about the bond issuer, so who is known as a bond issuer? Like government, corporations. Okay, so that is basically known as a bond issuer. Okay, so that pay the interest rate on the face value of the bond. So that is known as the coupon rate. Now understand another term, that is coupon date. What we understand by the coupon date? Coupon dates are the dates on which the bond issuer pay the interest to the which person? To the bond holder. Okay. To the bond holder, or you also can say to the investor. Okay, and that interest is provided by the borrower or say bond issuer. So that date on which the interest is payable to the bondholder or the investor, so that date is known as the coupon date. Now another term, that is the maturity date. So what we understand by the maturity date? It is the date on which the bond issuer or say the bond will mature. Alright, like in the example I explained, like suppose that this bond is just maturing after the 5 years. So the maturity date after the 5 year, that date when this bond is going to mature, that is known as a maturity date. Okay, and the bond issuer will pay the bond holder the face value of the bond. So that is also known as a maturity date. Why? Because whenever we are talking about the coupon date, like suppose that this the face value of the bond this, and the coupon rate which is given 10%, and the term period or say the maturity date is after 3 years, right? So like the for the first year the bond holder is going to get interest, for the second year bond holder is going to get interest, and for the third year the bond holder is going to get interest as well as the principal, right? So that is known as a maturity date. It is a date on which the bond will mature, and the bond issuer will pay the bond holder the face value of the bond. So that is known as a maturity date. Now the another term, that is issue price. Alright. So basically it is the price at which the bond issuer originally sells the bond. So it is the price at which the bond issuer originally sells the bond. Alright, so that is known as the issue price. Like at what price the bond or say the borrower or say the government or corporations issued the bond. Okay, so that price is known as the issue price. So that all are the different terms that associated with the bonds, and I hope it is pretty much understandable for everyone. Alright, now we are going to understand what are the different types of the bond, and from that you are going to get definitely one question in the 2 marks. Okay, so whatever the type of the bond I'm going to discuss, you just understand in a pretty much understandable way. Okay, so the first type of the bond, that is known as the zero coupon bond, right? So what we understand by the zero coupon bond, like its name is zero coupon, and in the previous term I already explained you, whenever you see a coupon rate, like whenever you see a coupon rate, you have to understand it is nothing but it is interest rate, and that rate will be applied on the face value of the bond. Okay, so whenever we are talking about a zero coupon bond, that means we also can say that is a zero interest bond. You just do not you are not going to get any kind of the interest from this zero coupon bond, right? Instead of that, bond will just issued at the discount to their par value, right? So that is known as a zero coupon bond, and that will generate a return once the bondholder is paid the full face value when the bond matures, right? So zero coupon bond, that means zero interest bond, like that just do not provide you any kind of the interest. Instead of that, that will be issued at the discount. That will be issued at the discount. That is very important thing to understand. Another type of the bond we have to understand, that is most important. Like you definitely get question related to callable bond, and after that puttable bond. Okay, so what we understand by a callable bond? So a callable bond is a one that can be called back by the company before it matures. Suppose that any government or say suppose that any corporations, okay, so suppose that any corporations just issued the bond, right, for the 3 years, right, but before 3 years, but before 3 year, this corporation, okay, this corporation just call back, this corporation just call back the bond, okay, before it matures. So that is known as a callable bond. So whenever any bond that is called back by the company, that called back by the corporation, that called by the bond issuer, you have to understand, bond issuer, that called back by the bond issuer before it matures, so that is known as a callable bond. And it is, it is pretty much riskier for the bond buyer, because the bond is more likely to be called when it is just rising in the value, okay, when it is rising in the value in the market. Suppose that any bond issuer just issued the bond 1,000 rupees, but the market value is running the 1,300, okay. So in that case, suppose that the corporation is just called back its bond, okay, before it maturing, so that is known as a callable bond. Now the another thing, that is the puttable bond. So just opposite of that, like when the bondholder, when the bondholder just the puttable bond, it actually allows the bondholder to put or sell the bond back to the company before it has matured. So in that case, in the puttable case, actually the bondholder just sell, or say just sell back to the company before it has matured. So this is the valuable for the investor. So in, different type of the questions can be asked in the examination related to that. So you just have to understand in a very understandable way, okay. So like we discussed, what is zero coupon bond, what is callable bond, just understand like this. Callable bond, like that government or corporations or the bond issuer just call back from the buyer of its bond, okay. So that is known as a callable bond. And what is the puttable bond? And puttable bond, that allows the bondholders to put or sell the bond back to the company before it has matured. So that is very much understandable for everyone, I hope, okay, before it has matured. So that is known as a puttable bond. So this is valuable for the investor. If I see what bond is, like different type of the bonds given in the option, so like suppose that the question is which bond is valuable for the investor, like in a very this question is very twist, like which bond is valuable for the investor. So the answer, that is puttable bond, because this bond allows the bond holder to put back or say sell back to the company before it has matured. So that is known as a puttable bond. So that are the some different type of the bond, okay. So in this session we understand like what is bond, who is known as the borrower, investor, all right. In the case of the bond, what are the different terms that associated with the bond, what are the types of the bond, that very much that very much important. So that things we understand in this particular session. I hope it is very much understandable for everyone, okay. Okay, so that's all for this session. I hope this session is useful for everyone. And now I'm going to show you how you can enroll in a target batch, because that is very essential, that is very important. If you're not aiming for the only 50 marks, if you're aiming for the 60 plus 70 plus marks, very good score, okay. So in this target batch, you just do not need to worry about the study plan, time management, like for every subjects, okay. You just do not need to worry, we have a perfect study plan, we have everything for you, okay. So and so now I'm going to show you how you can enroll in our target batch, okay. So the first thing that you have to just visit the adda247.com JIB exam kit, okay, where you will find multiple batches that actually running and that actually scheduled for your examination. And you will find multiple batches of the bilingual batches as well as the English medium batches. Okay, so you can also purchase, you can also enroll in the individual subject, like if you just enroll in the PPB, in the AFB, in the LRB, so you can also enroll in the you just have to just visit the view all, and after that you can just able to enroll in any individual batches. Okay, so if you just want to enroll in the target batch, suppose that, okay, so in the target batch, if you just enroll, like you will get a mock test, ebooks, as well as a live classes. Okay, and you know how you can enroll in this, like you have to just click the buy now section, and in the buy now section you have to apply the code, that is Y422, and you will get a big discount from this code. Okay, and now just think that flat 77% off you will get by applying the code, that is Y422. Okay, so this is how you can enroll in our target batches, as well as you can just apply this code in any JAIIB and CAIIB product, and you will get the big discount on that. Okay, okay, so now I'm winding up this session. I hope this session is useful for everyone. And if you're liking our effort, please do not forget to hit the like button on this video, and just do not need to forget to share with your colleagues so that maximum number of our colleagues can join with us. So thanks for watching me here. Thanks for joining.